How much longer can Chairman Powell and President Trump keep this market up? Stay tuned. Lots to talk about. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget, click show more for additional information and links on today's video. Also, if you're looking for a different opinion, that of Wall Street and Big TV, please do consider subscribing. So today's agenda, big charts, lots of new charts, lots of things to look at. From there, we're going to go what keeps me up at night, tweets of the week, what's on my radar, and game plan going forward into the second quarter. Let's go to the big charts. All right, first off, let's take a look at the S&P daily chart. What, if anything, do we see different? Volatility, I've had this line in the sand at 15, and we continue to hug it. So really, no change there. Pretty much, we kind of broke out of the box up here, okay, but not by much. And we're still pretty much where we were and below some of the highs going back to 2018. So the other big thing is when we talk about Chairman Powell and his impact, back in December, we had our first Now, look at the impact of what happened. The market goes up. Then they get dovish again, and we had our second and we continue to go up, and we have a triple dovish sign, and we have another and you see the impact. So that's the impact of the Powell put, meaning they continue to stay dovish. They're not going to raise rates. The next move is probably going to be down, which is surprising. But that also means they finally recognize that earnings are slowing across the globe. The next thing is, anything different here on our daily chart, just showing a different view. There's your death cross, 50 going over 200. Now it looks like we're going to get a golden cross, which is the 50 going above the 200. That's very bullish. I think it's a head fake based on some of the volume in the market. We've got negative momentum down here at the bottom. Now here's the big thing. President Trump, his impact, Thursday night, last night, and every single Friday, okay, except one, they've come out and said, getting closer to China trade. Well, look at them all. These are all announcements from the Trump administration about what's happening. They said nothing here, and they were negative that day, and then last week in our downtrend it was negative. But again, that's the impact of this China trade, which is ridiculous at this point. It's totally beefed in. My thought right now, short-term signals are negative. Let's go to the midterm charts. So here we have, on the midterm chart, your weekly chart. Nothing has really changed here. As you can tell, we have one trend line from 2009, and we're still below it. We keep failing at it on a weekly basis. Now, we have had a positive turnover momentum, but until we break that, to me, that is not a good sign. So I'm waiting for some additional moves. Now, here's another look at the S&P weekly, right? We can see where we were back in 15, 16. Stuck in a box. Stuck in a box, right? Crazy drawing there. But when you look at that, what else do I see? Well, it's interesting, if I do this correctly, okay? That's a classic head and shoulders move, formating right now. Formating, that's a good word. Forming, okay? Head and shoulders, which generally, that tells you where it's going. So we're going to continue to see how that one develops. Midterm charts, when I look at this, we're neutral. Okay, from there, let's go out to our monthly view. Has anything changed here? The answer is no. We're still negative on our long-term view. Why? negative divergence, right? So we hit highs in relative strength, highs in the market, and then we hit new highs with lower strength. That's called negative divergence, and we're doing it again right there. So right now, we have MACD, momentum, still negative. So when I look at that, we are negative on the long term. So we're negative short term, neutral on the midterm, and negative. So overall, negative. Really not putting any new money, but we'll talk about that in a minute. So the big thing with bonds, lots of talk this week. The first thing is, a couple weeks ago I talked about this big time divergence between the S&P and bond yields, okay? They should, as you can tell, move together, and they really do. But right now, we've had a big divergence. Like I said, a lot of people will say that the stock market is not as smart as the bond market. Now, here's the big news this week. We had our first inversion. Go below zero. Your 10-year minus 3-month is now at 0.04 as of last night. This doesn't update until the end of the day. So, negative inversion. We've been talking about that for quite some time. Here's all our different treasuries right now, and you can see we're down to 0.16. We got down to 0.11 on 10 minus 2. That's the big one that I look for, but yields continue to go down. Now, that's a good thing if you're in those individual spaces that we are right now. And then the last thing is, and this is what it's all about, if you invert 10 minus 2, okay, in the past, we have gone into a recession. So we've had our first inversion. We continue to watch this. Next up, what keeps me up at night? Just a few things keeping me up at night right now. The first thing is GDP, right? Growth. We've been talking about this. We rolled over. We had our final number for fourth quarter, 2.17. So GDP has peaked and is starting to roll over. Projections for first quarter, 1.2%. Hello, there's another rollover right there, okay? Then we have earnings growth, and you would say, hey, that's a great thing for everybody. But think about it. You have slow earnings, slow growth, and rising earnings. That's a squeeze, okay? That's a squeeze that's going to continue to hit earnings. This is what happens at an end of cycle. Then you start seeing layoffs. So we'll keep our eye on that. Consumer confidence has peaked and has also gone down. Let's talk about tweets of the week. First up, Charlie Biello, negative bond yields. Hello, look at this, 10-year, negative, Switzerland, Germany, Japan. And I'm not going to go through all these. We are seeing so many negative yields right now. Think about that. Last Friday, Germany had a new offering, oversubscribed at negative interest rates. Craziness. Next up, Andrew Thrasher. Let me tell you about Andrew. He's a Purdue guy. Purdue beat Villanova last week. Don't like that at all. That being said, Andrew's a good guy. He has some great stuff. Tweet below to follow him. So what he talks about is this yield curve inversion. I recommend you read this article because, again, yes, we do see recession, but it's not an overnight thing. We have to be patient. There's a lot of other factors. Good follow, good article. I'll have it below. Next, we have Lance Roberts. Janet Yellen suggests strengthening of look at that. Why is this on here this week? Number one is, I have a link to the article below. Absolutely worth a read. Janet Yellen, 2007, when she was chairman, I do not believe we will see another crisis in our lifetime. All right, you ready for the flip-flop? Here it comes. 2019, global central banks don't have adequate crisis tools. Hello, flip-flop. Now, let's go to what's on my radar. All right, so what's on our radar right now? Rates continue to go lower, so we want to make sure that we're in some of those sectors. Here's utilities. Not surprising, we're seeing a little bit of a pullback. That can become opportunities. So we have utilities on our radar. Now, when we pull back, we look to add if they're new clients or add to positions. REITs have done fantastic this year. Again, lower rates. Let's talk about gold. I have a lot of stuff here on my gold chart to kind of give you an idea of when to get in and when to get out. So a couple things. First off, you see right here, there's your golden cross, which historically has been very good for gold. Now, what happened yesterday was the dollar. The dollar goes up, gold goes down. Now, we went from overbought to oversold overnight. That's a lot of overs, right? But I think we're right now in the dollar, I'm going to call this neutral at this point, and we're looking at it and saying, okay, down here is the gold volatility index, very low, very complacent. I think the dollar stays in this range. I think this is a good buying opportunity, and gold continues to go up, one of our bigger holdings right now. So it kind of gives you a quick idea. Oil, we've been talking about this one. What do I look for here? Started adding oil. I am probably next week going to add to that position. What do we see? Number one is 30. Below 30 volatility index on oil is a good time to buy. We're at 28.52. So we look at price, we look at volume, and then we look at volatility. In a bit of a cluster right now, right? You see a cluster. Let me go back. In a cluster breakout. Cluster breakout. We're clustering again, so that might be a good opportunity. I will look to add to this position next week. Last but not least, we have healthcare. Healthcare has kind of been in and out, but you know, we did get back here in December. Okay, so from that standpoint, it's been a good move, but I'm waiting to see if I can get my pen to work. It was a good move to get in. Again, consolidation, breakout, consolidation. Hopefully we'll see another breakout opportunity. Next up, let's talk about our game plan. All right, wrapping things up. Game plan going forward into the second quarter. Low beta, right? Number one, interest rate sensitive. We're overweight bonds, all those sectors you saw that do well in interest rate, utilities, REITs, etc. Okay? I think that gold's going to be a good opportunity here going to second quarter. Oil's another one we're going to add to. From there, we've got fear and greed. Up to 48. When I say up, that's because extreme fear is over here. Down from 60. Indicators. We are negative short-term, neutral mid-term, negative long-term. So again, it puts us in a neutral position right now, which means we're not deploying new capital unless we see pullback in some of those sectors that we like right now. Thanks so much for watching. Michael Loftus, Wealth and Wisdom TV.